So we're live. Let me go ahead and find some of my browsers. What's up? How's it going? Let me go ahead and shut the door to my basement. What's going on, BG? Yo, what's up with that big drop? I told you guys. I told everybody this doesn't go in a straight line up. This thing is going to run around like a wild bronco. Excitement, and push down that candle because they're in trouble. What's up, Trey? What's up, Nitro? We'll break down some of this stuff, but yeah, let's go to the 1 minute. There's the fun part. Yeah, so just remember, we had a nice increase the other day. People start taking profits. This is, a period of basically distribution, and then they sold off until the end of the day. We bounced right back up. Then, we come today. Or was that today? That was today, right? Yeah. Let me go back. Yeah. All right. So let's go to the 5 minute just so we can. Here's our bull flag. Consolidation, move up. A nice little pop. Heavy spike, everyone's excited, and then push down, and then this is them trying to scare a retail. And there was also profit taking, because this pop right here, people made a lot of money on. And so you have to remember, there are more than just like longs and shorts. There were people who were just swinging this, and so they help push the price up. Everyone's excited, everything's moving quickly and fast, and then boom, taking profit, and then another leg taking profit. And so now, here we are. Here's after hours, and it kind of stabilizes, So we're going to be fighting for like 550. Can I zoom the screen? All right, so who wants to help me figure out how to fix OBS and fix all this stuff? Because I have no idea how to do this. Is that bigger? Or I don't think it's doing anything. Let me see if I can do this. Okay. Scale to window. Does that do anything? It's the same. What if I do this? Is that better? How do I do? Did it change for a second? Maybe this. If I do this, is that better? That fix it, kind of. Is that any better? I think it looks better. Is that what? Okay, perfect. There we go. Okay. So we couldn't really see it before, but now we can see it. Yeah, so, this is not at this point right here, this is them having to hedge all the fives. We went up, we passed over 5, and then once we started running up to like 550, we consolidated, and then we had another large move up. Now, at this point, they are actually probably fully hedged for the fives, because there was like 4-point-something million. At that point, then, there were probably a lot of deep in the money puts that were bought, and we'll have to double check with DZ. I've been meaning to catch up with him about the option scanner. and then we can kind of see what happened at the end of the afternoon. But let's pull up the options chain so we can kind of see. And I haven't really had any time. I just came back from putting my kids down, and then my wife wanted to talk to me for a while. So, all right, let's take a look. What is a realistic price target? So, I'll put it to you this way. A realistic price target on Aterian has so many factors of it, because like when you're in a squeeze play like GameStop, I thought the realistic price target was 80. That was honestly what my opinion was. I thought it was 80. And then we blew past 80 on GameStop, and I was like, how high can this go? And then people started getting margin called, and then there was like, let me just do this. I can show you. If we go to here, let's go back, because I think we have to go back to this part right here. Let's go to the daily for that. But let's take, for example, GameStop. Down here, GameStop was chopping around. It was consolidating. And this is actually right when I first started buying, was in the teens, like right around here, right before we had these big moves, because I had heard rumblings, and so I bought in around here in this like area. It was like a couple days had gone by. I told a couple of my buddies, hey, you should probably buy in too. And they were like, you're crazy. But I told them to buy it, and they bought like 10 shares or something like that. It was something stupid. And then it started moving, and then it just, we had these days when, and this is probably around the time of Citron, because I think it was like right around like $20. And I bought a bunch of calls, and then, we were having these days were just running up and running up and running up, and it really didn't stop. But these days were choppy, like they were super choppy, and like I don't think people realized how choppy they got. Like, this looks like a candle that we just had, right? You ran up to like 40 something, 30 something, and then they pushed it all the way back down to like 20 something. Let's go back to us, right? And look at some of these long wicks. They pussed up, they cover, and they push down, trying to get retail to sell. Look at this one. I mean, you went up to a high of almost like $500, and then you went all the way down to like $100 a share at one point. Like, I was there. I remember I think that was that the day they shut off? That was January 28th. They shut off the buy side, and they went from $500 a share all the way down to $100. And what was it? 110, I think 118, something like that. So that roller coaster was nuts, because it started out up here and then just whoosh, and then we finally finished. But like, if you go back to Aterian now, but you see these long wicks, and then they get pushed down. That's them just bucking and trying to survive. So let's go back here. So here we are. We just had that similar candle. Boom. We had a large run up, and then just pushed down into the evening. Still finished, but that's showing you that they had to cover something, and then they did not want the price to keep running, because if they let the price keep, look at, most of these long wicks, same thing right here. That was that first day with that high volume. We just had another big day, high volume, same thing happened. Price pushed up, they had to push it back down. So let's go over to some of the other data real quick, because I haven't had a chance to look at it. So let's take a excuse me. Let's take a look at the Finra data. I need to log in. Hold on. Guess it's been a while since I've been here. All right, Aterian. We still finished 13% up. That's good. I mean, like, people can cry all they want about the end of the day, but we're still up 13%, and that's pretty impressive. Here we go. Short interest. Let's go dive into this real quick, and then I'll get to YouTube questions and stuff. But yeah, so we're now number one for the short score. We've just been staying there. and we are number 2 for the beta, the gamma score that's in a beta program. There are currently no shares available. The cost to borrow now is at 121%. Or sorry, yeah, it's 121 right now. So it's increasing each and every day, the cost to borrow on this stock. And then your Finra short exempt was 1.2 million today, which is extremely high. Like, that's bordering on, like, you know, that's unusually high. And now, grant it was a high volume day, but like, they didn't do that on what was the first day we got volume? It was this one, the 4th. Here, you guys can't see what I'm looking at, so let me move it over here. Okay. Hopefully you can see this, and maybe I can zoom in just so you guys can see a little bit better. Okay. You guys can see this? All right. So here you are. You have Finra short exempt, right? This is 1.2 million volume on short exempt. Look at these. Before that, 1,800. But this first day they had volume that was high. But the high volume day. But we had basically the same volume today, and boom, 1.2 million short exempt. That's high. They're not supposed to even go over 10% of the. It is reserved for market makers that are supposed to be going through mergers and stuff like it's not meant for this. It's not meant to control the price this way and to scare retail. That's a market maker that does not want this price to move up, and they're shorting at key points to try to move the price where they want it. And that's abusing their that's abuse essentially. And here we go. They shorted an aggregate volume of 55% basically. So here's your short volume, here's your aggregate total volume. The actual volume you see on the screen, that's higher, but that doesn't account for all legs of trade. So should I be expecting a small drop? I mean, every day we should be expecting a high and a low. I'm expecting this type of candle every single day, because at this point, that's what we're gonna get. Let's look back. Let's try something out. I want to see something that you guys probably haven't. Some of you have seen it, probably others have not. But this was support.com, and I know there's a lot of bitter memories for a lot of people, but right around this area was basically, I'll zoom in a little bit. These guys right here had stacked the options all the way, and they had the entire float. And, they were suppressing it, but eventually this started going up, and they couldn't fight. The market makers had to hedge. The entire, shares outstanding were locked up just in, I think it was the $5 or whatever it was, $7.50s, whatever they were. They locked up the entire float. And at that point, it had no choice, and it ran all the way up to $60 a share, and then got pushed back down to 37. So does it look better? Oh yeah, sorry. The when I'm at home, I actually have a nice graphics card, and actually can stream that. Looks better. Yeah. Someone wrote, let me just go back and make sure I didn't miss anything. But yeah, let's go back to Aterian. I just wanted to show you, but these types of candles are what you see in squeeze plays, because it's volatile. You're going to have periods of really, really, really crazy trading. All right. Yeah, somebody said they bought the last 10 minutes. If I was a hedge fund, I would dump everything right before 4 p.m. and drop the share price. Someone got out at GameStop at 214. Well, if you made money, that's not bad. Other people lost a lot of money, so you can't go wrong with making money. We're getting to 10 tomorrow. So, I mean, we have to dive into the options chains and take a look. I mean, I think they hedged a lot today as far as the fives. So I think the fives are pretty much hedged to where they need to be. So the question now is going to be, all right, we said this. You have today plus 3. So ready, 1, 2, 3, and then on the 4th day, they really brought the. I mean, this moved up at the very end of the day, but all of these really got hit right there. So like 1, 2, 3, and then that day. So we just had another big one. So I would expect to see a pretty big like Wednesday or Thursday of next week. Maybe Wednesday. Yeah, should be like I think Wednesday or Thursday. And if tomorrow's crazy too, then probably like Tuesday and Wednesday next week would be pretty like interesting to see what happens. Just because I mean, this was retail FOMOing. Like retail was probably in somewhat on this because they jumped on when it was like moving, and then some of them have stuck with it and started reading the DD and all that stuff. But right here, this was like, hey, did you see about this stock? And I heard it was in. This is starting to be the rumor mill. Like, I'm curious to see if what happens is like if this gets even more tomorrow, where like people are like, oh yeah, like this thing went up 20, at 1.20%, and then it finished down, and people are saying they stick around and keep. It's the next. I'm hearing lots of things, so. I keep coughing, yeah. I was going to say, I've been having like a stagnant cough that I just can't get rid of. I can't shake for some reason. So I put a cough drop in, see if it helps. All right, let's see. We're going to 25, 2 to 3 weeks from now. What's going to happen is this. These things take a little bit of time. You see these start going, right? So we had a big day here. We had a red day. We're going to chop around, consolidate. And then, but once the cost to borrow goes up and stays up, it gets really, really hard to hold that position. Eventually they pop. That's typically how they get, short squeezes work. You're not, it's not going to be a straight line all the way up. And if you look at where we're at right now, compare that to that. You didn't see these highs and the price really moving until shorts basically probably got margin called. And that's basically what the thing is here. Like you're having this same sort of spike up, and you won't see the highs until probably more in this area. So it may take a couple days. It may be next week or the week after, who knows. But I mean, the one thing that's, if you're long on a stock and other people are short, you can sit long as you want, because for us, we're buying a stock that essentially, like Aterian's not that bad of a company to hold long, especially down at these prices. Like you're buying near book value, so I mean, it's not that bad. Can you explain what it means to hedge against call options? Let me make sure I understand what you're asking. When I say hedge, all right, so market makers basically are, their function is to provide liquidity to a market. But the thing is, they're not impartial. They are there to make money also. So it's kind of like a referee that's got some skin in the game. That's essentially what market makers are. They were given the special, status, and then they're allowed to basically do things that benefit them, which it's like leaving the fox in charge of the hen house. It doesn't quite make sense to me, and I don't understand why it's even allowed. But their function is to provide liquidity to a market, which means that if there isn't, things, they can create things basically just to make sure the market is able to trade. They are given short exempt status to, basically use at their discretion. And as long as they have a somewhat legitimate reason why they use short exempts, they typically don't get slapped on the wrist for them very often. Most of the time, they just abuse the hell out of this, though. I mean, that's the honest truth. They abuse it to make sure that your options finish, at max pain. That's typically what they use those short exempts for. So, but their job to hedge means that if, say, for example, let me pull up an options chain so I can just show you guys. Let me pull up. Here's the FUD article written by a hedge fund guy. I was looking at that this morning. Excuse me. Let's see. So I'm going to pull up an option chain and just take a screenshot of it real quick, and then I will put it over so you guys can see it. And then I'll get to the comment section, but here we go. But yeah, I don't know if some of you guys saw, but apparently the guy from Hoop Money wrote me, and he said that he would do a collaboration thing with me, and we could talk about like delusion and some other like fundamental stuff. So that's cool. I was gonna say I've seen his stuff before. All right, let's see. So that was interesting. I got that today, and a couple of people had reached out. I should say more than a couple of people. I'm getting my inbox flooded right now. I'm trying to get back to everyone. If you have written me, I'm trying to get through all the messages. It was way more than I thought it would ever be. And I'm trying to do my best, but I also obviously, I work a full-time job, and then I have 2 kids and a wife, and she, this is not my full-time job, so I just come down and do this when I can. Especially with the YouTube thing, that's just new. Here we go. We're screenshotting this. I'll draw some pretty pictures on to see you guys can see, and I'll bring it over so you can check it out. Let me pull up Paint, and we'll clip it out for you guys. All right. So then we can go over hedging and kind of cover where we're at right now. Because these options chains are very full. They're very, very, very full. And that is dangerous for any market maker, because if they lose control, then things can go parabolic very quickly. And let me pull up this one real quick. And there's a lot of people thinking that the stock's going to go down next week, it looks like, because there is a lot of put volume. But that also just may be them trying to gain control, and then you have some money to push down into. Let's see. Because at this point, everyone's kind of not sure what's going to go on, because there is a lot of call volume that's coming in. Okay. Let's do this. Let's bring it over here. All right. I'll zoom in so you guys can see. Can you guys see that? If I move it like here, is that better? Can everyone see that? I have to get further down to YouTube. Yeah, part-time job too. I love trading the DD. Thanks. All right. Everyone can see this option chain? My buying target is up to $10. Yeah, I mean, I would buy even higher than that. It all depends on how the chart looks. I mean, like I don't get restricted where I just say, this is my price target. This is like my price target for GameStop was 80, and guess what? It went to 500 a share and 600 at one point, I think, pre-market. Like, shows how much I knew. I mean, like with squeeze plays, you'd never know. Like there could be millions of naked shorts underneath it, just like there was for GameStop. And then when these guys got margin called, it just started going up, and it just didn't stop. I mean, having a price target in like a you can't do it on something like this. Like, you have to basically just say you trade the charts that's in front of you, and you just have to go, hey, there's going to be unknowns, and for some people that they don't like that because it's not a trading plan, but like that's how on this thing it goes, is like we don't know how high this can go. If you use a barometer, then like I would say, until the shorts actually start closing their position, we will have no idea how high this thing can go. And at this point they're not closing their position, so I mean, all right, so let's pull this up. Everyone can see it. I think some hedge funds loaded 6 calls to go after this. Yeah, I mean, it's very possible. And they probably are also coming through, and they are, excuse me, they are basically trying to keep the price down. I'm sure they sold a bunch of calls. So they weren't buying. They were basically trying to suppress the price with some calls, try to get it underneath the $6 mark. Because, once again, this is a scary area, and I'll explain why. So here's your strike prices. Right now we are currently here. I marked things in red that are burned. So all of these are out of the money for puts, and these are all out of the money for calls. At one point, though, we were over this, though. So that would have indicated at least 4 million shares there, another 4.6 there, another, like, what was that, 1 point, like, you basically have like millions of shares that were basically going to be in the money when we were up here. And that's interesting. And this up here is filling up too. So are we off the threshold list already? I did not see that, but let me check. Yeah. Yeah. MS Paint. I'm old school. I don't have anything that's better. So let's see. But we're not gonna be. Let's see. I need to pull up. All right, here we go. I can see now. So I guess some comments are not coming through, so that's fine. Just want to make sure I've got this correct here. So, all right, so right here is a danger zone for them. Anything up here is like they might lose control and get margin called, because this will start flying if they get this gamma ramp up. At the same time, they're trying to push down the price, and this is why, if you see right here, this is a large number of puts, and puts are more expensive typically than. So this is atypical. I can tell you that, and the reason why I say that is because they're out of shorts. They can't use shorts anymore, so they're actually having to use basically in the money put options to try to push down the price. That's what it appears to be, at least. And they're not all, probably. I'm sure some of them are bullish, $6 puts. But, like, yeah, I think I even have some $6 puts that I bought. I sold them, not, like, bought them. Like, I actually sold $6 puts, but they all end up here. They don't separate them from, like, which ones are bullish, which ones are bearish. So you have to actually use, like, a option scanner to kind of differentiate the two. And, on the call side, same thing. Like, there are like bearish calls that get hidden in here, and people just assume that these are all like bull calls, and they're not. Let's see. Those options are probably solely from mods and I mean, people trade this any which way, and I don't blame people for trading the chart that's in front of them. Like, if you swing that and you end up generating more shares long, then that is what it is. Like, that's how you trade. That's how you trade. I don't typically trade that way, but I did at least sell, which is a bullish. You're basically promising to buy these shares at $6. I think the premium on it was like 50 cents. So I actually did a bunch of them, and I netted that, hoping that it would go up, and then I would just have extra cash to buy more shares down the line. But if not, I'm going to get assigned with them. That's just how it works, and I have enough cash for them. So I may buy things at 6, even if we don't finish over 6. So that will not help my cost average, but I want these shares delivered. So, and it at this time, at least when I bought them, it was adding pressure. So. Didn't he say he had 8 fingers? Oh, you're talking about the Brandon Yo claims to have 2.3 million shorts secured by margin for $10.15. Yeah, I had seen that tweet. I don't know who that guy is. I don't know if anyone even investigated to make sure he was like a real person. That'd be an interesting side project for anyone that was interested. Is that guy a real, trader? I don't know many traders that have disclosed that large of a short position that, I think you might be trolling. Oh, no way, he's real? Okay. Yeah, I don't know who he is. Like, I've been reading on Twitter that the bad boys load tons of calls. 70% of the day's transaction was real. Yeah, I was going to say that sounds about right. I mean, they're trying to keep retail from buying. So, like, just so everyone knows, I just want to make sure that this is clear. You, as a retail trader, basically are not affecting the market, like, in any sense of the way. Like, it's messed up, and that's just how it is. Like, you guys, when you buy your shares, 90 to 95% of the time, they never let exchange. So, you think I'm buying 20,000, shares, and I'm going to help Aterian get, this buying pressure going. Those 20,000 shares are just going to end up in a dark pool or off exchange, and they will never hit the lit exchange to help buy pressure. They'll get redirected off and basically washed out. So they will be neutralized, and they will then be, so the only thing that it helps for, though, is on the back end when they need to deliver those shares. It is. That's when you have these, pileups, and that's what you saw on the chart. If you remember, like when I was showing you guys, if you have this big volume day, a couple days later, you're going to have this other spike, and it happens every couple days, and because when retail starts FOMOing in, they're buying shares, and those shares are due in 3 days. If we're doing options, they're due in 2 days. And so typically you have these run-ups, and you have larger, because they have to hedge these days because they're actually having to buy shares on the market because there are not enough shares to actually do that. So how do we ensure that it closes over $5 tomorrow? Well, retail can't do anything, planned. You can't collude or anything like that. I can tell you personally my trading, plan. I started buying deep in the money $3 calls that by tomorrow the theta on that's almost gone, so they're basically going to have to be fully hedged. And I think based off of that was just one thing. So deep in the money calls, like a deep enough where they can't scare those out and get you to paper hand them. Like, you're going to have the money though to when they go in the money. If you let them go into expiry and you have the money for them, your broker should, double check with your broker. I don't want you guys to assume this is all correct because your broker could be different than my broker. But with my broker, if I have the cash in there, they will go ahead and transfer those over into, shares. And you can exercise right before the end of the day. That way the market maker can't hedge. But if you start off Friday and you hedge if you exercise your call options right away, the market maker will then de-hedge your options, meaning that they have the ability, because now you're just basically a T+2 person, so they can actually de-hedge your position. If you held it all the way into close and then either did it last like right before the market closed, those people couldn't de-hedge at that second, or they might be able to, but like with high frequency trading. But for the most part, like, your share is going to stay basically locked in that entire time. So, I just want to read through this. But yeah, if I was going to go ahead and say I wanted to affect how the share price is affected, or sorry, how the share price basically reacts tomorrow, and we were dipping, I would make sure that I was buying in the money call options, or I was selling puts at like, something I don't think they're going to get to, which is like, $4 a share or something like that. Like, I don't think they can get that low. I mean, if I would feel safe in the threes or the low four, like if the actual four, if those were worth anything. I have to see what they were giving for $4 for tomorrow. With the amount of theta on there, they're not giving much, just because there's not much time left. So they might give you like a penny or two for those ones. So it may not be worth it because that's not a lot of premium. But yeah, as retail investors, we can't collude, like insure anything. But personally, for me, if I was trying to affect the share price, I think buying deep in the money calls is how I personally would do it. But that's not for everyone. I mean, if you're fine buying shares and buy shares, if you don't have to do anything I say, because I'm not telling anyone how to trade, because I'm not a financial advisor and none of this is financial advice. I'm just talking to you guys about how the market kind of works. And these market makers, so I think I was telling people, I don't think I ever answered that, but basically these guys, remember I was saying they had to provide liquidity. So as these prices go up, these call options, if they were assuming they're bullish, would have to start being hedged. And they don't have to do the whole thing all at once. But what they do is they have like a mathematical formula. Basically, as these things go up, then these start, like, it's basically like a magnet. So like the farther you go up, the more you have to start accounting for these ones and these ones and these ones and these ones. And then when there's high volumes up there, it's almost like a magnet. It gets attracted to it because it's flowing up. And so it wants to go this way. So the only way you can drop it is if you start doing things like this, like buying, if these are all bearish, assuming, you start buying a ton of like, how many million is that? That's a couple $1 million worth of puts that were at the time probably, they just got the share price underneath like 5 something, and they probably just flooded those to help push it down. But anyway, as this gets pushed up, the market maker has to hedge and make sure that they have these shares in case. So that's why you see sometimes as you're going up, you will see a lot of buying pressures, because as we went up over 450, and once we went over 5, as we went up to like 550, now all of these right here are in danger of being in the money. So they actually have to start buying more to actually account for those. And as people were buying options throughout the day, it was pushing the price up also. So you're looking now at this area right here, which is getting super dangerous for these shorts, because this is where we finished today. And if something happens and we flew up to like here, like 650 to 7, then all this below is now in the money. And that's scary for them, because down here also, that means all of these here are also in the money for next week. And they have to start accounting for those, because we're on the last day tomorrow of the new week. So like, you're assuming then all of these are like a delta of like 1, and then you'll start having like deltas of 90s and but I'll probably have to break down how all that works. But it's basically the probability of the shares being in the money. It has to do with that. But I don't want to get too in the weeds with Greeks, because I know not everyone here is as familiar with them. But essentially, that's what a market maker's function is, and they have to hedge to basically make sure that they have the shares. So they're the ones that actually were buying, because shorts aren't covering. So if shorts aren't covering, that when you're seeing movement going up, it's all based off the option chains at this point and buy pressure. Okay. 750 calls for tomorrow. I guess someone added 100 shares at 10 a.m. and loaded up 750s for tomorrow. Okay, yeah, that's living dangerously. I hope you're right, because I have I would love to be able to just lock in that premium and not have to take a L on one of the sold puts. So good information on options. Thanks. You don't just lose your wait, don't you just lose your premium that you just paid on those calls? Yes. So that is the dangerous part of, it's not dangerous, but it's the only way that at this point retail actually has an impact on the share price, Jerry. So I am willing to pay a premium to make sure that my shares are seen on the market. And that is not everyone's cup of tea because it is more expensive. But it's one of those things where if I was just to go to my broker and if, for example, I don't have IDX, this is the only way that I'd probably be able to get my, my buy pressure or my sell pressure onto a market. So that's the reason why personally I'm doing this, because these market makers, when the other week, all of a sudden those things have filled up at like $2, $1.50. I don't have the week prior weeks, but like there was a lot of really low in the money calls that they had to hedge. And that's why we moved up so aggressively that first day, was because there was a ton of options that just all of a sudden were in the money because somebody came in with a large order, which I'm guessing was not retail. That was definitely a long, a whale or something that did that. Or it could just be the shorts deciding that it's time to switch positions. And so they're actually the ones that are stacking up call options to try to mitigate their losses long, to offset their short losses. But yes, you do lose your premium, and so it's not the way most people trade those. Let's see. I can say with 100% certainty, if you use Schwab, they will email you and call you if you do not have the funds to execute those. Yeah, so like not every broker is the same. You probably should call your broker to find out. But yeah, you do need to have the money or else they will close them for you. And that is not what most people want, I think. Okay, so deep in the money, May 20th, daily play dailies, OT. Okay, so add the money volume. So he's saying that he is, I guess, deep in the money the May 20th date for expiry. He's got deep in the money calls, and he's playing with some daily like add the money just to swing it, I guess. Wonka's golden ticket is now liquidity if hedge funds are offering. Yeah, I mean, there are no shares borrowed. If you cover shorts, do you get the amount you shares shorted? If you cover shorts, I don't know if I understand that. If you cover shorts, do you get the amount of shares you shorted? Do you mean shorts have to buy back the amount of shares that they shorted? Yes, that's how it works. Unless they were, for example, naked, which means that nobody ever reported it. It just went on your books, and then you shorted shares that didn't exist. They're basically like phantom shares that you went onto the market and did something that, you did something naughty. How do they use puts to push down the price when they don't have the shares available to short? Well, that's not their problem, and that's the thing about options, is that's how you can have an entire float like Spurt, like support.com, locked up at one particular options chain, because that's nothing stops the market maker from selling those options. And so all of a sudden, if it gets out of hand, then the market maker is in trouble, because it's not, you can't tell retail to stop buying. Well, you can apparently with GameStop and other meme stocks, but essentially you can sell every single share that's in the float just on the options chain, and it's completely fine, because they'll just make sure it doesn't end up happening. In the rare cases it does, though, that's when you see these gamma squeezes and things getting out of control. So what's a bearish call? It's when you sell a call instead of buy a call. DC Chargers, yeah. This morning, 220% on. Yeah, you sold at the top. Congrats. All right, what's the estimate for tomorrow? I mean, once again, it's hard to say. We hit 664 today, and we've been in this constant uptrend. We haven't had even a red day. I mean, it's been a long time since we have had. This was our last red day, and that was Friday, right? And this is like when the hype kind of went out, and then Monday just exploded. We haven't had a red day since then. I mean, technically we're due for one because you don't have things that usually, like even here on this run up, you had a couple of great days and then you might have a red day. Like a couple of good days, red day, then a bunch of just solid run up. And then at that point they needed to push these things down. So, but yeah, I mean, we're very much so in a steep uptrend. We are trading within basically a channel and a rising, these things can explode at any point though. It doesn't have to be, but I would expect kind of in this area, which is in like beginning of May, like end of April, beginning of May, that's when I kind of expect some fireworks, because if you just kind of look at the chart, how long it takes sometimes to actually get things going, it usually doesn't happen overnight. It takes longer than it usually takes 2 or 3 weeks to get these things kind of unraveled. So, how high could it go tomorrow? It could probably go into like the 6s again, and then maybe retrace, and then, it just depends on how much also buy pressure there is, and, what somebody here on that's long has money, and you can tell that because they've been able to kind of slap the ask at certain times to really just run this up and down. And so whenever you have volume, it brings other types of traders. And so you've got momentum traders, you've got swing traders, you've got all sorts of different traders. So you've got to basically figure out that there's going to be multiple people with different objectives. And like today, it was very much momentum. Like there was momentum on our side, things were happening, and then people took profits, and that's the type of trader those people were, and that's fine. But you just have to realize that with this is not just longs versus shorts. There are people in between that are just trying to make money, and that's certainly fine. Somebody said 650. They think. If we stay above 5, we're golden. Yeah, I mean, like you saw the options chains. I'll bring it up again. If we finish above here, if we just finished right here, like today, then this is a lot of shares they owe that I don't think have. I mean, you're looking at like 4.6, another, what is that, 4.3, or sorry, not 1.3. This one's about 1 million. If assuming these are all like bullish, but there's going to be some, I think I sold some puts, meaning bullish puts at $4, and I'm pretty sure my volume's locked into both here and here because I bought some this morning and then I bought some a couple days ago. So I bought some bullish puts a couple days ago and received I think like $20 or about $20 premium per. So, but yeah, if we finish over basically 5. Shorts are in trouble because by Tuesday next week they're going to owe a lot of shares, and I don't know if they have them. So we're starting, and the fact that these options just keep getting bigger, it's not gotten huge here though. So I think they're trying to make something happen, at least some fireworks happen in this area, because they've really stacked the thing. And by maybe by halfway through tomorrow they'll roll some of these and put them into these options chains, and we'll see some numbers increasing for next week too. But at this point, it looks like there is a lot of interest in this right here, like this target area, because if they start running, this will run pretty hard and fast because the amount of you got 3.6, that's basically 2 million plus another, you're looking at a lot of call options that would potentially be getting into the money and then maybe even hedged. So we'll just have to see what kind of pressure it comes. Define parabolic in the context. Parabolic just means it goes basically it's an increasing exponential rise up. That can I draw on this? Yeah, I have the wrong tool. Hold on, delete that. It comes from parabola, I think, and then basically you can I bend that? Yeah. Now I'm messing with it, but the steeper the curve, when things go parabolic, it means it rapidly increases and it's exponentially getting faster and harder upwards. I don't know if I can, maybe if I do it this way, I crowd the, no, but I don't know what I'm doing. All right, I'm using MS Pen. I probably should get a pen or something to do that. Do you think this will carry into next week? Yeah, this is going to carry on until basically, I mean, because just think about this. The volume on this day will carry into next week, and the volume from next week will carry into the next week. It's like think about this. You have like 25, 26 million shares in the float, and I personally believe that most of them were owned already by retail, because you had, since March, let me just show you this. This is March 8th right here. Look at that. March 8th, it was 100% utilization. That was our earnings call. Right? There's earnings, E for earnings. So they had 100% utilization on March 8th. And since then, they've managed to find millions and millions and millions of shares to short. Yet they were 100% utilization here, back here. I just want that sink in. So we're over here, and we have no shares. Yet we all of a sudden found millions and millions and millions and millions of shares up here. Riddle me that. Excuse me. All right. Put the cough drop back in my mouth. Make me have... I appreciate everything you do. Learn so much just reading your DD and tuning into your YouTube channel. Thanks. Yeah. I hope someday I will be able to drive something besides a Hyundai. Hyundai wasn't bad. I still have, but it's not horrible. It's just, at this point right now, I'd like a bigger car because I have 2 kids that I cram in there, and the Elantra is not very big. I'm just catching up. I think he's asking if you actually get the shares, which you don't, you get the profit or the margin called. Wait, what? So a margin call is, just make sure a margin call basically is when you are told that you need to produce money in your account, or your shares will be liquidated, and that can be long or short. If you're short a position and you don't have enough liquidity and enough assets to basically show that you can keep your short position, that's how you can get margin called in that sense. But it can happen also on the long side. Like if you're using margin and all of a sudden the stock market goes down and you're long, you can get margin called, and if you don't produce the money, then they will go ahead and liquidate your entire portfolio until they get their money back. So I don't know if they're using that margin when they're saying margin called in that context. I don't think it's being used correctly, but maybe I'm misunderstanding what you guys are writing. But yeah, when you get shares, if that's what you're talking about, when you exercise shares, basically you allow them to fall in the money. They're supposed to place actual shares in your account, and they have T+2 days to deliver those shares. So on Friday, by Tuesday of the next following week, they should have shares in your account. If you're talking about the puts, they give you the profit up front, and I don't want to get into the weeds on this, but when you sell a put, they will give you cash, and then if the stock price goes up, you will just keep the cash and the premium, as it's called, and they will keep their shares. But if the price goes down below the price that you set, like for me, I bought a $6 put, right? So here's $6, right? And we're obviously below it. So if tomorrow comes by and we finish at $5.58, right? My $6 calls, I've been obligated. I promised to buy those shares. That's why it's bullish. You promise to buy those shares at that locked-in price. So I get to keep the premium on that, but I also have to buy the shares. I don't know if that's what you guys were asking on that question, but this guy can't predict numbers. No. It's a battle for 5. Yeah, I mean, it could be a battle for 5. It could be a battle for 550. It could be a battle for 6 or 650. I mean, it's hard to tell until we see pre-market what it's going to do. If it's still hanging around 550, then 5 is probably the battleground, is my guess. They typically will be able to push it down because they want those calls to be out of the money. Zip Trader Charlie says that we made it through a couple gamma squeezes. That's the first step. Most stocks don't get this far. This is a 2-3 week play or 4 week play. Finishing over 5 increases the chance of a squeeze. Yeah, and that's true. Yeah, he is absolutely correct about that. So the way it works is the longer this goes, the more dangerous they're short, because they are now holding basically like really high cost of borrows against their stuff, and if they don't have the liquidity to keep it up, then they're going to get margin called, and when they get margin called, it goes parabolic. It just goes straight up. Don't mind you coughing. It messes. If it messes with you, don't go for opioids. Vape some. Yeah, I don't smoke, but I just have. What's it say? Like and subscribe. Oh yeah. Isn't he Marine? I think no weed is there. No, I don't smoke weed. I have in the past when I got out. I smoked, I think, before, like a couple of times. It wasn't like a huge pot. I just didn't like how it felt. But back then it was like, smoking swag weed, and we didn't have very good weed where I was growing up, and we would go down the city and go get it from shady people on the block that probably put like oregano in it, and who knows. But I wasn't a big fan of it. And let's see. But yeah, I know weed's better now. But every time I do it, I'm usually drunk, and I was gonna say I usually get the spins, and I'm like, why did I do that? So I don't really do it very often. Every once in a while, if I'm drinking and somebody offers it to me, I'll take a hit, but usually not. Let's see. Booze is okay. Yeah, I mean, I drink, but I don't. Yeah, I don't drink every night. I wanted to celebrate last night, so I had a beer. Quick from Raider. How was my day? My day was good. How was your day, Trey? Finding shares. Okay, we're gonna keep this not political in here. Like I want in the Discord we keep everything from being political. So, let's keep politics out of the stocks, because that's the way I don't do religion. I don't do politics on my channels. It doesn't have anything to do with what I'm doing. I subscribed to your channel. Very interesting. Thank you. I just talk about stuff. I don't even know what you guys want me to talk about. I just try to answer questions that people ask, and if I can answer them, great. If I don't, I'll find out the answer for you. But this is exciting, but also scary. Yeah, I mean, at any point you saw, we were like ecstatic. Everything we're mooning, everything's great, and then whoa. That's what I told you. I wrote that DD, and I was like, you have to keep your emotions under control, because if you let the high highs get you, you'll get your low lows get you. What's funny is we finished 13% up, but it feels like a defeat. Think about that. And they know that. These shorts, they know that everyone was ecstatic, everyone was happy, and then if they just nail it down right before the end of the day, it doesn't feel as good. Even though you're 13% up, it doesn't feel as good, and it shakes confidence. These guys have literally, they have people that work for them that can understand the mentality of a trader. Like, they hire people just to find out what's going to break you down. Like this. Look at this. You had these every single day was red. Just red. Every day, single day, bleeding. Couple of good days, bleeding. Like, just like one good day, bleeding. Like they know this is what they do. Like they know how to get people to sell, and that's why they're good at what they do. It takes a lot of confidence to say, you know what? I know my numbers. I know what I'm seeing here, and I don't think something's right, and I'm just gonna stick with my guns, and I'm fine holding this company long. And it's gonna be exciting. It's gonna be scary, but it's one of those things where if it happens, and it does happen to go up and it moves very quickly, a lot of people in here will be very, very wealthy. And that's speculation, but it's happened before in other stocks, and people were able to sell and make lots of money. And somebody told me that they've some of the money that they've literally, it's changing their life, which is nice to hear. So I hope everyone is able to get a taste of that, and finally get a win for once out of I mean, retail traders get it bad. I mean, we get the short end of the stick most of the time, and that's why I started the Discord, was because, I didn't like seeing retail traders just getting bashed around. And the problem that most retail traders have is they jump right in, they're using real money, and they just get eaten alive because they don't understand what's going on. Like they understand, like they might learn like some TA, like a couple of things on candlesticks, but they don't understand the fundamentals behind these like things. So like they'll be looking at a balance sheet, not knowing what they're really looking at, and they skip right over like warrants and like notes convertible and like things that like they need to know, because these things are important, and they just nobody's telling them what to look for. Like if you wouldn't work for like a series, you took your Series 7, you'd know all this stuff, but like retail doesn't know this stuff, so they jump in not knowing anything, and they can lose large chunks of money very quickly. And especially if you get like involved in like Wall Street bets, when like losing's acceptable and like you're not protecting any capital, like it gets super scary. And so if I get it, we're in a stock that's a squeeze stock, a meme stock, but at the same time there are fundamentals behind this company. And like I'd looked at this out of all the ones that were being mentioned on that short sweet sub, like this was the only one that made sense to me. It was a smaller float. It was a company that was like a real company, like it sells things. It was down because of shipping, and that's something that I thought, well, that could be corrected at some point. It's not going to be like this forever. It's been a long time with the shipping, but like it is slightly improving over the last couple of weeks, and we'll see what ends up happening. But yeah. All right, so wouldn't be surprised if we were red and go into the long weekend and then rip massively on Monday. Yeah, I mean, that's very possible, because I think they have to hold these margins over the weekend. So remind them of in the money calls. Yeah, I mean, remind them of in the money calls. So if you're buying into money calls, like obviously, that puts pressure. Like, say, I'm just going to pull up the options real quick again, just so people can see it. If you buy, for example, like a 350 call, right? It's in the money. You're going to pay, a premium on it, and you're going to basically pay extra than you would if you were just buying shares. So this is not everyone's cup of tea. But it would make the market maker say, okay, well, he just bought, 5 of these, and do I have the shares for them? And they have to decide, we're going into this thing, is he really going to exercise, or he or she going to exercise them? And so they're going to probably have to buy some shares just to make sure that those, 500 shares are actually there, or at least, 350 of them, or whatever the percentage is. But as the day gets, closer to the end, like if these things finish in the money and you decide that you're going to make sure you have enough money in your brokerage, and you're going to take them up on their offer and say, all right, I'm going to let you exercise my shares, and or you do it yourself, then the thing that says before or end of the day for exercising. So if you exercise during the day, then what ends up happening is retail thinks for some reason that if you exercise, they need to give you your shares right then. But that's not true. If you exercise your calls at, say, for example, 10 o'clock in the morning, all that's going to happen is actually they're allowed to de-hedge your shares. So you're actually better off if you want to maintain the pressure of that share. You would be, or those shares, you would basically wait till the very end of the day to make sure that they went into the day with having to hedge that. If you exercise the shares early, then that's not going to help anything. In fact, it's going to do the opposite. In fact, it's going to de-hedge. So if I have $4 calls expiring tomorrow, I should wait till the end of the trading day to either sell them or exercise them. Yeah, basically, if that's what you want to do. But once again, this is not financial advice or anything. It's just people talking about stocks, and I'm not an expert, so don't quote me on anything, and don't listen to my advice. I am not qualified to give it to you guys. TDA, they call it a maintenance call, but it's no joke. If you don't liquidate, that's the way it works. They will literally keep you from trading, and then they will lock you out and sell your stuff for you. Okay, I must be a little bit behind on this because I'm realizing that some of these were probably, they're a little bit ago. Okay. Yeah, like they can go up $2-3 in a matter of like half an hour. It can move really quickly. No trading this Friday. Yeah, it's Good Friday in the United States, so there is no trading on Friday, just Thursday tomorrow. Have a good night tomorrow. See y'all in the pre-market. Night fun. All right. It's like liquor before beer, smoke before you drink, you're fine, drink before smoke, spin time. Yep, that's how I usually got. So if they close under 5, will it still be a sweet? Yeah, I mean, so these guys have, I was supposed to check if it was reg show, right? Let me see if reg show's still on. So reg show, all that is it's the regulation securities threshold list, basically. And what that means is it's basically stocks that had a certain percentage of, I think it's like 5% of their float it's failed to deliver. Yeah, I don't see the reg show, so we must have came off reg show today. Which is interesting. So they must have found some shares to reset the FTDs that had just piled up, which is interesting. And let me see this real quick. Hold on. Do they have the FTD data on? Because we're not going to see the big spike in FTDs until much later, is my guess. Because the spike in FTDs should occur. Here we go. It should occur probably in the next couple days because it's accumulation of things. They're going to. Is it this one? It's this one. Okay. Make sure I got it. Yeah, so is this FTDs? Yeah, FTDs. So you'll see these numbers start climbing, and then once you get into like a certain percentage, they're going to start actually getting themselves on the reg show threshold, on and off, but it will start growing, and then it will remain constant for a certain amount of time. They're technically supposed to close those reg shows after 13 days, but it never happens. I was telling people the other day, when Overstop.com was on the reg show threshold, they were on there for 666 days, even though the rule says that at 13 days they're supposed to close those accounts. Like the clearinghouse is literally supposed to liquidate those shorts. They didn't do it though, and the SEC allowed it to happen for 666 days. So, of course, right? Because I had a conversation with Finra about that, and the woman did not want to answer my questions about that. Yeah, but yeah, it can still squeeze. It's just a matter of like time at this point. Evening boss, technically there's a limit to cost. Wait, is there a limit to cost to borrow? Or can it increase to infinity? Yeah, I mean, hypothetically, yes. Yeah, I mean, it's their shares. They can charge whatever they want. So I don't think there's like a cap on it. But at this point, the one thing I want to clarify. So when you see, and I'm going to bring up an old one because I'm on my buddy's Ortex, and I don't want to blow up his spot because it does say the username and all that. But I just want to show you guys this real quick. Where's Ortex? Here it is. All right. When you see these things right here, this is a percentage. This is not the actual cost to borrow. So when you see like a 200 here percent, that is not actually what they're charging the shorts. And I think a lot of people get that confused. When you see cost to borrow, it's actually this. This is not current. This is, I think, yesterday or the day before's. But I'm just showing you when it goes up a certain percentage, that's what you see down here. So if the cost to borrow goes to like 50 or maybe more like 60, the cost to borrow min might have gone to like, that's what you're seeing reflected in this. It's not actually this is 75% cost to borrow. It's really 32%. It was probably like but it moved up significantly from whatever it was at prior to this. I just want to clarify that for some people because I know. I saw some posts and they were like, oh, it's, 400% cost to borrow. I'm like, that's not how it works. But let's see. But yeah, from what I understand, they can increase whatever they want because they're their shares. Mind games, yeah, they understand the mentality. That's why I buy after resist. Yeah, so like basically do the opposite. It's kind of funny, but like when I just want to show you this over here. This is your RSI. Down here, this dotted line, that is oversold. Up here is overbought. Now we're on daily right now, so let's go to like a 5-minute. So right now the RSI had been bleeding. It had gone down. It bounced off like the oversold part, and then we actually had some like recovery a little bit in the after hours, right? Because that's what this bounced back up. Somebody pushed the price back up, and they're trying to push it down. They want $5 to be the battleground here, and it just depends on how much bulls are willing to like put up tomorrow, because they do have a gamma ramp above them, and they can push this on the last day if they really wanted to. If they just slap the ask all day, these guys don't have the shares to actually like produce all those shares. They'll become FTDs down the line. It may keep them from running today, but the longs are trying to do this for as cheap as possible, because like it's basically just like a game to them. Like it's the longs are trying to spend as little as possible to make the squeeze for their positions, and the shorts are literally just trying to defend anything they can from happening. So like their goal is going to be continue this downtrend. Basically we hit this high, let's make sure we get down in this area right here. Like we'll consolidate, and then we'll drop them down back into like this this area. That way we're in a constant downtrend, and we're going to fight for 5 all day long, maybe even 450. Like that's a possibility too. But it's also the other possibility is they have more shares that they have to like deal with, and they if longs are slapping the ass, we start moving up, then we can move back up into this zoom out so you can see it, back into this channel. So like, are we going to bounce off one of these? Like if we were to make what do I have to do? I don't draw on here very often. I don't use this program to draw, but like if we were to come down, I can't really even see, but like if we're in a channel right here, we're bouncing off the tops, and I guess I could draw another one roughly. Probably be, but if like we're in some sort of, that's not even probably good. I need to probably do anyway. I'm not going to draw out these because I'm not on my normal program that I do drawings on. But would we do this where we kind of come down tomorrow, bounce off like somewhere in like the 460s or 470s, and then move back into the like that's something that could happen. My guess is though they really want to fight for this 550 to 5. That's where the battle is really going to be. It's just going to be consolidation, chopping up and down, and then trying to finish above 5 for the bulls. And then the shorts are just desperately trying to get this under $5. Here's $5 right here. This is where they want to be tomorrow. Like they want to get it right underneath it, or even further. So it's all going to depend on, the big guys are the ones that move this thing. That's the one thing that retail has to understand. Retail, unless you're buying these, the problem is we're not buying huge amounts of like in the money call options or in selling puts. We don't have the money or the like firepower to do that. Like there's a lot of money riding on this stock right now, and most of it's not retails. It's longs and shorts that are fighting it out with each other. And we're just kind of like cannon fodder in the middle, because we're buying either really smart options and helping, or the longs, or we're wasting our money and buying things that never going to hit, and then we're just going to burn our money. So that's kind of what retail does. And then we think we're doing all this stuff, but really it's just it's like you give your kid the imaginary steering wheel, and they think they're driving. That's essentially what retail does sometimes. Is we think Now, if there's enough retail, that's one thing. But at this point, Aterian's still a pretty small name. It's starting to spread, which is interesting, because if it keeps going, then that's going to be something that's... But I would be looking to see if it retests back in the 6 areas, and or if it drops down and retests and tries to, because you're going to probably bounce off maybe, I think for a while we were moving off the 60, and that's what we kept going down to retest things. And we haven't touched that since, back down here. So, like, do we go bounce back off that? This 60 is the green right here. So, like, the moving average, could we come down, touch that, and then move back up? That's very much an option. And I think we even said it in the TA that they were looking at like 620s as being like an area. And then, it's possible for us to head down from there and then reconsolidate and then go back up in the last wave. Or it's something that could literally just pop off tomorrow if they had enough, buying pressure and there was enough people slapping the ass. So, let's see. Oh boy, do we remember those days. Yep. How do I access your original DD Reddit on ATER? I've seen it before, but how do I find it? You can probably go to the ATER stock and just go look back in the history, or you can go to my profile and probably just scroll through. I've written a lot of them, so you're going to see like months worth of me keeping track of things on here and kind of trying to figure out what was going on. I don't feel defeated at all. Yeah, I mean, like, honestly, we were down the 2s days ago, so sell euphoria, buy fear. Yeah, but here's the thing. I got to it and then I kind of got sidetracked. When we're buying, like if we're retail traders and we're buying, right, we tend to be the ones that are FOMOing in on these big green bars. We get excited. We're like, oh, we're getting left behind. It would have been so much smarter to buy these dips. Like when things look awful and you're like, oh, is this going to go down? That's when you're supposed to buy. When the MACD is about to cross over, when you're down on the RSI and like kissing off the the bottom of the oversold, that's when you should be, oversold. That's when you should be buying. And then when these things run up and they're getting hot and they're pushing these prices, retail keeps buying up here, and really they should just be saving their ammo for these dips, because we're coming up in waves. Like, look at this, like coming up, bouncing off the 60, and we're moving up, and then we'll probably come back down. Like, these are your entry points if you're like going to be entering. Like, you probably just follow the 60 and just every time it touches it, just buy it. I don't swing trade and I don't do stuff like that, but like you could do something like that if you were in. I think somebody was saying that they were trading off of the exponential moving average, and that's another good strategy for some people. I typically do longer swings, and that's just how I trade. And everyone has their own thing, but I've been most successful in my trading career by doing longer swing trades, and that's kind of how I view this. If we close under 5, we got to run nuts. Yeah, I mean, like, honestly, like, there are way too many shares out there, and at some point, it's going to come to light. I mean, you want to cut off the shorts ammo, you could always DRS. Like, that's what GameStop did, and we have a transfer agent, the Philadelphia transfer agent. They will take your Aterian stock and put it in your name, and then nobody can short it. But it also takes like a day or two to get it out, and then you have to transfer it back to a brokerage. So it has drawbacks, but if retail was to buy in and get frustrated because things weren't happening, that is always an option because you remove it out of the DTC area. So let's see. Does anyone want to ever work at a short-term or hedge fund short-term, see how they operate inside? I've got a buddy of mine, and here's the thing. I don't know anything about what they actually do in their hedge fund. I just know they work in oil. So their hedge fund literally is like, takes like rich oil guys and like invests their money. And it's mainly in like commodities and other things. That's what they specialize, I think, in. But I just have I've never asked them how like the day-to-day works for them. I just know one of my buddies got hired by a fraternity brother of his, and next thing you know, he was moving up in the ranks, and then he hired one of my other buddies to go work for him, and so they work for hedge funds. I just don't know how much they know about all this stuff or even pay attention. So, but they're very tight-lipped about that kind of stuff because I think their clients are all like billionaires, and they don't want to violate that trust. how could we have only gone up 38 cents with such high volume? Well, there's high frequency trading, which happens, which basically is people tossing back shares back and forth. So that gets turned on, so that increases the volume. You've got swing traders who sometimes will go in and out in the same day. You have day traders who are literally trading back and forth, like each swing up, each swing down, each swing up, each swing down. Like they're doing that. And we did actually move up quite a bit. At one point, we were up 20%. So I was going to say, I would imagine that, that would make sense with that much volume, but then they really tried hard to push it back down to get people to sell and to make it look as bad as possible. So if you were to grade how we have done over the last month as far as a setup for a squeeze, it's good. I was going to say, I mean, like, honestly, like, if you just heard, I think, Charlie, or Zip Trader Charlie, whatever his name is, most places don't get this far. Most of the time what happens is people get in, and then people dump out here, and then the stock falls apart. We are in a solid uptrend, and we are going through, and we've got some volume. Like, yeah, we have some quiet days, but like we've got some volume, and the more and more it hangs around, the more and more it's going to be like, oh well. All right. But yeah, we're doing very, I think, as far as the chart, it looks great, and it looks like we're doing an amazing job. We're not falling through. We're not Let's see. Where did you learn to read and understand fundamentals behind what you're looking at? I've got plenty of time and patience to learn. It's over years. I mean, obviously, like, I don't tell people my age, but I think I've given enough hints that I'm not like a 20-year-old kid. I have 2 kids, and while they're young, I had kids later in my life. So but I started learning this stuff through books, which actually on the Discord I provided. One of my buddies provided a link that's got a whole bunch of PDFs and stuff like that you can read. And then I also, I used to just pick up books at the library and just read them because I figured I need to learn about money because, I didn't feel like I learned anything, at least while I was a young adult in the Marines, because I used to just go out and buy kegs all the time when I was living in San Diego, and I'd have no money ever, and I was like, well, I was a sergeant in the Marines, and I was making okay money, but like I had made some money when I was in Iraq, and I just blew it all, and I was like, that was probably a bad idea. And then I went out and did it again, and I blew it all. And my brother was, he's a lot more responsible than I am, and he was like, dude, you gotta get together. And he was like, you should probably learn about money. I was like, okay. So, my grandfather always had like traded stocks, and I knew about stocks. I owned stocks, and he taught us about them. But I was just in my 20s, and I was having fun. So, I can't think about people doing aerobics in front of a TV whenever you say exercise. It's pretty good overminding. It's on the list. Reg show flag is for 413. Ortex just apparently pulled it down, I guess. So it was on Ortex yesterday, and it wasn't on today. So that's probably just Ortex being Ortex. Let's see. How is there not massive lawsuits on Overstock? Yeah, there. I think there has been, but they actually sued Overstock because Overstock put out a digital dividend, which actually made the shorts cover. So if we actually, I don't know if we can. I can probably pull this up real quick. Overstock. Just show you though. Overstock for a long time came out. Let me just see. I mean, they've had a volatile history. Like really, really. Like, let me see if we can pull up the monthly. All right, so this is a monthly chart on them. So this is actually, you'll see. So they came out, they IPO'd, and then they had this nice climb up, and they got shorted down. This is where I think, was that 19? That was about what I think. So they got shorted down. But this run up here was because there were so many naked shorts on their company. The CEO bought shares of his own company and then asked for them, and they couldn't produce them. Like, which is pretty insane when you think about it. Let me go to like the daily. But they were a stock that basically at one point got down to like 2. They were just being shorted, and then they issued a digital dividend that made basically the shorts cover, which I think wasn't even that one. It was like one of these other ones, and because I think but like this stock has been volatile because there's been naked shorting in it, and there's been like, but he couldn't get his own shares delivered to him, and he's the CEO of the company. So yeah, but I think the shorts actually sued Overstock, and he won. The CEO of Overstock won, but like they said it was like unconstitutional for him to like do that because it would trap them. I'm like, fuck you guys, you had that company on the Reg Show for 666 straight days, and yet you have the audacity. It's like the robber that breaks into your home, breaks a leg, and then sues you. Like, BlackRock versus Citadel. I think BlackRock's way bigger than Citadel. If you actually just look at what they own, Citadel's wants to be BlackRock, but they're not BlackRock. BlackRock's a BlackRock, and they are a massive, massive organization. So, okay. So let's see. I'm not doing anything when I buy 50. So yeah. So I don't want to make you feel bad, Michael Benty, but yes, when you buy 50 shares, your shares, unless you route through IDX or some sort of actually lit exchange, your shares are just going into a brokerage account, getting funneled out to a dark pool or over the counter exchange thing that basically like it's basically where your shares get matched up with other like sell orders that are at the same price, and they just wash out. So yeah, unfortunately, unless you buy like deep in the money calls or sell puts, which is bullish, then you wouldn't produce any buying pressure by buying 50 shares. No. And that's why I was trying to explain to retail, that's even though I had to pay a premium, that's why I do these things, because that makes the market maker do that. So, latest. Let's see. I didn't realize you went live. Oh, yeah, you can always go back and watch. Yeah, it's recorded, so you'll be able to watch it later if you want to start at the beginning. Yeah, and I was going to say, DZ and I talked about it. We will do probably a collab video. We just weren't sure what we were going to talk about yet, so we had to probably cut for that before we get on there, because if not, it's just going to be us talking to each other and going, so maybe we'll just leave the chat on so we can actually like read what you guys have to ask us, but we probably should have some structure so we can share screens, or he can put up what he wants to put up, and I don't know how to do that, so we probably have to learn how to do that, because I don't know if he knows how to stream this stuff, but I don't. Only the huge hedgies are naked shorting. No, I mean like everyone does it. Like honestly, anyone that's in the industry knows that these guys short naked all the time. Like it's almost like a laughable, like, yeah, of course they do that. Like these guys know everything that's going on, and they know it's illegal, and they just go, yeah, well, it is what it is. Everyone's doing it. It's like recruiting in college, like everyone's booster is probably doing something shady, and that's the same thing with the market, But I mean, look at this. You've got bull flag, bull flag, bull flag. Like it's moving up, and it's moving up in like waves, and like if you zoom out, this is a healthy chart. This is not, but this is the problem. This is what everyone remembers, is right here. If you don't zoom out and take a look at what you're doing long term, we went from down here to way the F up here. When in doubt, zoom out. We're fine. Like, do you feel like everyone felt really good right here? No. And then all of a sudden, boom, we had another bull flag. And, just like, you got to realize that they know this. They're trying to shake the tree. And as long as you hold true to your conviction, then, I think my theory is that they don't have the shares that I'm each week are happening, which is why we're having these. They have to get all these shares. They have to get all these shares. Now they try to get everyone to sell. Oh, they didn't all sell. Okay, now we got to cover some more. And this is just like through the options chain. This isn't even like if we're talking about like the shorts haven't even covered yet. And shorts probably won't cover unless they get margin called, is my guess. Like at this point, they're like clinging on to the ship and going, nope, not going anywhere. And you're trying to like knock them off with oars, and they're like, nope, holding on for dear life. That's what they're doing. So yeah, like if you guys are worried about what's going on, zoom out and just take a look and say, oh wait, it doesn't look as bad as I remembered that feeling of, oh, that we faded into the market and now it must be over. Like it looked like it was over here. It looked like it was curling down and then boom. So I expect the same thing to happen. We kind of consolidate down here. We probably test that like $5, that's where the fight should be. We might be down here because look at this. So you go up and you sag down. Go up. We went up twice. We went up here and then up again, another level, and then you sag down. And then we might do another one. And but each one gets closer to them being very uncomfortable. I feel like retail's so easily distractive. Yeah, I mean, like that's because retail traders are bad traders typically because they don't do things the correct way. They're not looking at this chart and going, "This is super bullish." All they're remembering is, oops, sorry. No, I don't want to go to store. I want to go here. All they remember is this. This is all retail remembers right now, is this feeling when it went all the way up here and then it bled out and then everyone went, oh. That like, have I seen the updated Ortex? I have Ortex up, I think somewhere. Let me find out where I put it. Okay. So the updated Ortex, and maybe I should screenshot it for you guys so you can see it. I like to look at certain things that other people don't like to look at, so I will go ahead and do the ones I think are important. It's getting spicy. I like it. All right. We did technically enter the threshold list on that, but securities lending volume's getting high too. All right. And there are some other indicators that we can look at, but I just want to show you a couple things. All right. I'll pull this over once I snapshot it. Because I'm using my buddy's account and I want to blow up his spot. So. I always feel like I get on these tangents and then I have to like figure out, because I have to catch up on the chat then, because I like go down a rabbit hole. And for anyone asking, I did not take my ADD pill today, so I've been kind of all right, I'm not gonna do my normal like highlight thing. I'm just gonna save the Ortex. Today is the 13th, at least for another couple minutes, and then we'll just pull it over here so you guys can see it. Where's my mouse? Yeah, there it is. Okay. You may have to zoom in. Okay. We'll just go over the data everyone always looks at. So like I said, once again, this number here does not mean it's 39%. Our cost to borrow right now is roughly about like, I think it's actually higher than that. I think if I remember correctly, if I saw the, I don't think Ortex's stuff is correct right now. Yeah, the cost to borrow right now is actually 120. unless it went down in the after hours. But this is saying it last updated 22 minutes ago. I'll refresh just to make sure, but okay, it's gone down slightly. It's gone down to 109 as of 11 minutes ago. And they had returned about like 45,000 shares. But, you know, they used a lot of shares today. So back to the Ortex. Come on. Okay. So right here, we have about 41.5% of the estimated float is shorted right now, which is equivalent to almost 11 million shares. That's high. That's very high. Utilization has been pinned at 100%, which is this line right here. So this is, you know, you can't see it here, but this is March 8th. And this was, like, I think, March 7th. So this was, like, right around earnings call. And they had been at 100% for over a solid month. I think it's like 36 straight days. It's been on 100% pin, which means that they don't have any shares available to like give out, basically. All the shares are basically accounted for and lent out. If you look at the actual shares on loan right here, you've got like 18.22 million shares on loan. Remember, the free float is 26 million. And Toots own about, where's my spreadsheet? Where are the institutions own? It's like 15 million. So, yeah, between mutual funds owns like 4 point something million, and then institutions own like 11 million. So, like, at this point right now, retail owns more than anything, and like they're taking retail shares too, and they may or may not record them. We'll find out, but there's a lot of shares on loan right now, and sometimes what they do is they borrow those shares not just to short, but they borrow them to actually sell off. So it's like they're not shorting them technically, but they're basically using them as ammo to do waterfalls. So they'll borrow shares and they'll hold on to them long, and then all of a sudden, when things look like they're, like, you know, getting a little bit weak, they'll just shovel out, as you know, it's called bid whacking. You whack the bid as hard as you can and as fast as you can to drop the prices. So when you see sellers basically selling for a loss, that's called bid whacking. And it's because they don't care what the price of this stock is. They're not trying to execute for the best price. That's what normal, you know, sellers do, is they want to get the best price when you're selling. You want to get as high the value as you can. So when you see somebody just shuffling off shares as fast as they can, and they're like asking, or they're, you know, they're basically whacking that bid, it means they're just trying to shake retail. I mean, it's very obvious when you kind of know what's going on. So, but yeah, percentage on, so the entire, like 70% of the entire free float's on loan right now. Like, it's crazy. And 41% of it's been shorted. So, like, these are stupid numbers. You do this to a company that's going out of business, like at Enron, when they were like on the last legs. Like, you don't do this to a company that's still alive. Any insight into how whales? Oh shoot, I was supposed to go up like 15 minutes ago. All right, I can do this for maybe 5 more minutes. I'll get at least caught up. But I was going to say, I do need to go up and go to bed. And I was told my wife I wouldn't do this all night long. So, but yeah, whales are helping squeeze this because basically retail can't do this alone. So the whales were this first day. Let me go back to the one day. This first day, that was whales. And they helped out here. They came in today too. These really high volume days, those are whales helping because retail doesn't have the buying power to do what they were doing. Like, they made this stock pop that first day, and it's because they brought volume and they brought, you know, actual buying pressure. So, I mean, you can see the one bar on this first candle was like 35 million. Like, that's not retail on a 1 hour bar. Like, that is not retail. So, yeah, the whales are helping. I don't know who they are. Well, maybe on the 13F we'll get to see. How reliable is Ortex? It's not that reliable, to be honest with you. They're okay, but and on your crushing life, thank you. Thank you for the stream. I have to shower and get ready for bed, but I've heard all I need to hear. You're an angel. Thank you. It's important that every retail yeah, I mean, if you trade and you want your shares to be seen, you have to route through IEX. Like, IEX is like the only one that's actually like a reputable. I don't even know how to take that out. I don't think I even did it right. Can I take that out? I don't even know what I'm doing with that. Oh wait, is that the trash can? There we go. But yeah, it seems to me right now that we're traveling along the 60 moving average. So, I mean, I would see that as a point of reference just going forward. It seems to me that every time we've bounced, it's been right there on that green 60 EMA. I feel like a monkey screaming, when's margin call? Yeah, I mean, your aura analogy had me dying. Sorry. According to a fake tweet by a short whale, his stop losses are 10, 15 on 2 million shares. Probably a fake tweet. And someone said that he's real. I don't know. I've not confirmed it for myself. I can tell you most traders like that don't tell you what's going on. But the fact that if he is a real person and he's tweeting about it, that means he's showing false bravado, which usually means that they're in trouble. Because that's what Andrew Citron did with, or was it Andrew Lefton? I can't remember what the guy's name, but Andrew from Citron. He came out and did that same false bravado and was like, these idiot game stoppers, they have no idea what they're doing, these Reddit kids, and he just pissed off a bunch of people, which made people buy more. So, that guy's playing with fire because, you start insulting, Reddit and retail traders, they're going to just buy harder. All right. Looks like Monday are red days, and then we gap up in the middle of the week. Yeah, I was going to say, I kind of figured the big volume day was here, so you have basically Wednesday that would correlate to. Possibly if we end up over 5, Tuesday and Wednesday would be when we probably start moving up. Yeah, I mean, if we look out, if you go over the past month, we're up 127%. Just Investor. Yeah, you're right. So, like, when in doubt, zoom out. I just won deployments of income. I'd be the richest man on earth. Yeah, I mean, like, I remember one of my friends asking me what I thought of Bitcoin. And this is in, like, the early days of it. And I think at the time, I was like, I don't even know. So I started like researching it, and I was like, it's monopoly money. Like, dude, what are you doing? And he had bought like a couple thousand coins, and I'm like, what are you doing? Like, get involved in the stock market. Like, I don't know if he ever kept those coins, but I have to double check. He was a Marine with me. I would be super curious to see if he is now living like the high life, or if he just sold for like, a couple grand gain. But I mean, like, he literally had like a couple thousand of them, and I was like, how much did you spend on this? And he spent like, I don't know, like a couple grand. And I was like, what an idiot. Like, you just put it in the market, because I was a market guy. So like, I thought, but he's probably way richer than I am now. Short recap. We're just kind of talking about, like, if you want to look at this, zoom out. We're doing fine. Like, just, this, everyone thinks about this last part. We pushed back up. We recovered. It's going to be fine. If you zoom out, we had sagged on some of these steep ones. It's it's not that bad when you zoom out. Like, just keep that in mind. But that's what retail's problem. They have short-term memories, like freaking fish. And I'm a retail trader, but like I've had to train myself not to do this. But like we tend to just remember what happened last, and what happened last was like scary. And so you come in today, and they're gonna push it down just for fun, just because they know that they got you nervous at the end of yesterday. So now you're like, oh my God, I was up and now I'm down. And should I just sell? Like, I'm pretty close to where I bought in for some of the, the OG guys. And I'm like, if you waited this long and you sold now just to like basically take a 20% loss, like, that's some people. That's how they trade. And, it's why a lot of them, lose money. And for me, I'm fine sitting where I'm at, and I feel confident in that. I don't think these guys have the shares that they owe us. So that's the recap for me. Any impact if we put higher sell order? Yeah, I mean, that's slapping the ass essentially. If you put in, we put in a higher sell order of the shares we own, won't those shares be available for borrowing? Oh, you're doing that theory that basically if you put a sell order in, that they lock up those shares. Yeah, it doesn't actually work that way. They'll still sell your shares short. I mean, he said there's no way he's real. I mean, you're talking about like me? Like, yeah, I'm a real person. Oh, I don't think I quite understand. Maybe I'm missing part of that, but like, I meant to say there's no way he's real. Oh, you're talking about the short guy that's claiming to. Yeah, I mean, I can't imagine any short would come out and be like, "These are my stop loss." Like, no, like it's probably someone just trolling. But if he is a real person, then that's a bold strategy because it's probably just going to rally people up and. You want to be nonchalant about it? All right, well, we'll make you lose money. What if you're just buying in now? So here's the thing. So like, Aterian's going to pull back at some points, and what you have to do is you have to find out where you feel comfortable buying. Like where are the levels of support? And I think in the Discord, people have been like calling out levels. If we break through here, then we're going to probably test this level. If we go past this level, we'll. So you may want to join the Discord if you're not in the Discord and just try to find out, ask people their opinions where like a good entry point is. For me, if I was just looking at it, we've in the past, we sagged down, we bounced off the 60. So if the 60 is going to be about here-ish, that's about 493 roughly, and it would probably be like midday that they would try to attack that. I don't think they go straight after it because then it would be more like 466, and it would take a lot of ammo to get down there without like longs buying that up. So I would kind of expect in this range-ish, like in the like maybe 493s midday, they might, or like around 1, they might try to like push it down. Test that $5 and then see what the bulls do. That might be an entry point if you were buying in now, but that's not financial advice. I have no idea if it goes down that low or if it just skyrockets in the first thing in the morning. It's hard to tell with these things, especially with something that's this volatile, where like it can swing 20% down, another 12-15% in a matter of 2 hours. How am I determining an exit price? I'm at this point not. I'm not even considering an exit price until I see shorts covering. So, like, if shorts don't want to cover, then I won't sell. Like, I'll just sit here until they decide to cover. And so, if they want to sit here and borrow, at 109%, that's fine with me. I can sit here all day long. It doesn't cost me any money. I can just sit here. I'll sit on my shares. I'll sit, I've got some long calls. I've got, if there's short-term ones, I can always sell those and just buy shares with them and sit. And, I've got DRS shares that I've already done. I can always DRS these ones too if I don't like the price where it's at. So, yeah, I'm not considering an exit price at this point. Until I start seeing shorts actually covering, I'm not interested in that. So, yeah, he has 2 buy-ins Average about 5. Yeah, so I mean, you're getting close. Yeah, you're actually profitable. So, congrats there, Sacred. Or is that scared? Sorry, scared. Not a huge trade for me, but yeah, I mean, you've got some Mavis bags. Yeah, yeah. If you here's the thing. So if you guys are, if you're not part of the Discord, I would recommend just going to the Discord. There's a lot of really smart people in there. The whole reason I created it was because I thought retail typically would need each other, and I learn things from people in there. People learn things from me, and we kind of all kind of share and collaborate. And yeah, I think it's important that retail get good information. I feel like they don't get it very often. So, but yeah, this is it. I'm gonna have to go upstairs. I'm pushing midnight now. So, but yeah, thanks for staying up with me. I will be with you guys tomorrow. I have to go to work, obviously. But so I'll just let you guys know. I've been trying to do this thing where if people are interested in making me a live streamer where I can, talk all day long about the stock market, that'd be cool with me. I like talking to you guys about this stuff. So if anyone has any interest in making that happen, here's my Patreon. If Aterian runs up and you guys want to support that little dream, there is the Patreon. Yeah. But if we can get enough people to replace the salary I have for right now, I'll do this every day for you guys and research stocks for you and all that jazz. So, yeah, I'm not leaving either. And I'll link you guys to Discord if I know it's in my profile, but I think I've got the Discord up right now. So let me just pull it up. Yeah, but I'm happy we've gotten 55 donations so far, and we're like a sixth of the way there to get to the point. So maybe someday that will come true, and I'll be able to live stream for you guys every day. And then if anyone has questions, I'll answer it in real time, and we can kind of research stocks and do things together. But in the meantime, I'll always be in the Discord. So here we go. That's the link to the Discord, and I hope you guys join us in there. Once again, it's free, and everybody kind of just, it's a good place to learn, ask questions, and do what you need to do. So thanks so much for coming out and listening to me jabber on about Aterian and stocks and, all sorts of other stuff. And I enjoy hanging out with you guys. So, and if you can like and subscribe, I'm supposed to say that apparently. If you listen this long, if you can do that, that'd be great. I think at this point I have like 600 subscribers. I need to get to 1,000 or something to get monetized. So that'd be great. All right. Thanks, guys. Have a great night.